What's up, investors? It's the Russian dude. From the very bottom of this correction, for example, the S&P 500 index already rebounded approximately 3%, at least at the moment of recording this video. But the fact is the fact, whenever corrections do happen, almost nobody knows how deep will they go. This can be a correction, a recession, a depression, a stagflation, nobody knows. But another thing is almost certain. When there is a reversal, the share prices will start to go up significantly, and they start to do it relatively quick. So it is very thin, very short period of time when you can catch this rapid growth of shares. So let's talk about this phenomenon in general in today's video. To begin with, as we mentioned in some of my previous videos, as soon as there is a pivot for the Federal Reserve, as soon as they stop increasing the rates or keeping them at the same levels, whenever they start reversing their strategy, in a particular case, whenever they start reducing the interest rates, once again known as the Fed's pivot, this is exactly historically when the share prices for the stock market was declining. Since 1970s, there were at least 9 times when Feds did their pivot, and on average, the decline of the stock market was approximately 27.25%. And right now, approximately in September, we are expecting this pivot to begin. So pretty much we're literally right around the corner from another similar event. In addition to that, also historically, the month of September is one of the weakest months for the stock market. So, whenever you combine those two, September being the slowest, the lowest month for the stock market, and September is also the month when the Federal Reserve wants to do its pivot, we might potentially see a disastrous combination. So, this correction we just witnessed might be just a prelude for something way bigger. We also know that one of the main things, one of the main triggers why this correction started in the first place was, let's call it like this, unsatisfactory labor data, and then also a significant overvaluation of the big tech companies. Well, they were the ones who dropped the most, bringing the entire indices and the entire stock market with them. And also a very interesting phenomena, just in the last several weeks, we saw the growth, one of the record-breaking growth of these big tech companies, following by one of the most record-breaking declines of the very same big tech companies. And yes, these two records were literally broken in the, once again, last several weeks. So as you can see, once again, to sum it all up, we are, at least it feels like, right around the corner from some potential disastrous events. We are not yet done, in my personal opinion, with this correction. This was just a test of a market's resilience. We might go even further as long as there is going to be any trigger. And potentially next trigger, even though this is relatively expected, can be once again this Fed's pivot. In order to make this correction into a more disastrous events, the trigger should come unexpected. But nevertheless, after every single correction, recession, depression, stagflation, all kinds of these things, every single time the market, the US stock market, overcomes these obstacles and difficulties and start increasing once again. It will take much more for the entire US financial system to collapse. So once again, those market drop downs, they only open a significant, very good opportunities for people, for investors, for market participants to make some good money. And another potential trigger what can start the growth after we are done with the correction, which might come approximately in September, October, are the presidential elections in the US. Despite who is going to win, this almost does not matter, because take a look at this graph. Historically, after the presidential elections in the US, the stock market was demonstrating pretty good performance, and one of the main reasons for this, it is because there was no more uncertainty. Who is going to be the next president, what he or she is going to do about the US foreign policy, financial system, economics. Long story short, just this uncertainty, it literally goes away, and investors, they are now feel more confident investing their money on the market. In addition to that, historically also the months of November and December are pretty good months for the stock market, specifically December, as some people call it, Santa Claus rally. So basically, investors, don't worry. The markets will go down countless number of times in the future. They will most of the time bounce back, most likely beating their all-time previous highs, once again, for as long as the US financial system remains the top financial system of the world. If there are much worse conditions, much more severe situations happening to the US economy, such as, for example, US losing its AAA plus rating, then it's a completely different story. But as for now, for the foreseeable future, most of the time, I'm not giving you 100% prophecy, not giving you 100% certainty that this will happen, but there's a relatively good chance that this will continue happening exactly as it was happening for the last several hundreds of years. And as always, traditionally, we end this Tuesday video with this table which shows the earnings report of this week, so feel free to pause this video to see if any of your companies are reporting. And as always, if you found this video useful, informative for both, please like it, subscribe to my channel, and see you tomorrow.